So with our daily candle set to close in less than 2 hours, snipers, this Tuesday update is extremely important as Bitcoin is starting to tighten up inside of this range with an extremely important support level of 22,576, which is the previous weekly open. And the most important resistance level in the immediate short term right now is 23,795. If we can break above 23,795, it opens up the door to 28,000, potentially even 30,000. But if we cross below this extremely important support, 22,575, the previous weekly open, just like last week when Bitcoin bounced at the previous weekly open to form a higher high, if we break below this extremely important support level, it opens up the door to some downside targets, potentially towards 20,000 US dollars. This is going to be a very quick Tuesday update, snipers. Make sure you watch until the end of the video and smash the like button if you want more of this content. But let's look at what happened to the markets today, because the DXY did make a major move with this daily candle closing in less than an hour. It looks extremely bullish, but we didn't get back above the most important level, which is 106.56. The DXY is going to be critical over the next few days, snipers, to monitor what happens here, because if the DXY breaches above 106.56, that means it is back inside of price discovery and potentially going to see continued upside, and that would certainly put downside targets on the table for the equity markets and Bitcoin, because you can see we're having a direct effect of the DXY showing strength today, represented in the equity markets down right now, and it looks like the S&P 500 is potentially just forming a lower high here. That's why this is a neutral puzzle piece right now. If the DXY stays below 106.56 in the macro, that could assume 17,600 was a bottom for Bitcoin, and that the DXY is ready to calm down, and that we could potentially just form a higher low at most in the worst case scenario before Bitcoin can see some continuation. But as Bitcoin has been underperforming the equity markets right now, this is critical for the S&P 500 right now, because if the DXY starts to calm down, then maybe the S&P 500 can breach above 4,200 on the E-mini futures contract, which would indicate a potential trend reversal for the equity markets to the upside, and that might allow Bitcoin to breach above 24,300, the major resistance. And what's interesting about where the S&P 500 is right now specifically, and I saw this today, if we look at the S&P 500 against the money supply, notice how we have this long-term channel here that dates back to 2009, and right now we're testing not just the 20-week moving average. A lot of us know that we're testing the 20-week moving average for the S&P 500, and sometimes during a bearish trend, you'll stay below the 20-week moving average, and every now and then you'll come to test it but get rejected. And so the equity markets are at an extremely critical point right now, where if they decide to move higher, not only are they getting above the 20-week moving average, potentially indicating a reversal in this bearish trend, but it'll also break the midpoint of this macro channel, which would really free up some space for the equity markets to see some continued upside. But we're certainly facing resistance right now for the S&P 500, and it is very clear that's why we've yet to breach this high here at 4,200. And Bitcoin clearly also underperforming the equity markets right now. If we look at Bitcoin against the SPY, just notice how on this daily chart, Bitcoin formed that higher high, but Bitcoin against the S&P 500 formed a lower high. And what's also interesting about Bitcoin against the SPY right now is notice how we're also testing this previous resistance as a support right now on the 6 hour. It's very clear. Bitcoin against the SPY, you can see this was a previous resistance level, and now we're testing it as support. If we breach below this, that could be an early indicator that Bitcoin is ready to decouple away from the S&P 500 and potentially see some further downside. And so just to summarize everything, snipers, I don't want to confuse you. I see we have Matthew, Bayode, Faruka, and Jacob on our live stream. Good to have you all. Remember to smash the like button for the YouTube algorithm and ask any questions. I'll address them at the end of this video. It's going to be a quick Tuesday update, but I want to first summarize what I'm talking about right now. So the S&P 500 facing a major resistance at a critical level right now. The DXY, in the macro, we could assume it's a bullish puzzle piece as long as we're below 106.56, which we currently are. I'm not liking how this daily candle has a bullish engulfing right now. And so over the next 24 to 48 hours, it's going to be important to monitor this. If the DXY gets back above 106.56, then that could turn into a bearish puzzle piece, because that would assume that maybe this was just maybe a bullish flag to see continuation. But if the DXY is truly calming down right now because we broke back below 106.56, then in the macro, that could at least assume that even if the equity markets and Bitcoin do pull back, they're not going to pull back to their recent lows. They're just going to see a pullback to maybe form a higher low. And so the first confirmation of this, regardless of the four-dimensional revolving parts, not to confuse you snipers, is just realize the range that we're in. A support of 22,576. There's a reason we haven't seen any price action below that. And then our resistance, 23,795. This is a tight enough range that you guys can get an early confirmation of whether or not we're going to see a breakout or a breakdown. And so I would not be taking long positions here at resistance, because it's clear right now Bitcoin is still facing resistance. We do not have a confirmation of a breakout, and you can clearly see that if we look at the channel that we're in. Notice how Bitcoin is back inside of this channel here, which means that we're still inside the same consolidation. And so when you're at the resistance, that's not where you want to be taking long positions, right? That's actually where you'd want to take short positions. And then when we come to the support, let's say around 20,000, if we come there, then maybe we can entertain a long position, because as long as the DXY doesn't form new highs, we could assume that 17.6 is the short-term bottom. But if the DXY forms new highs, that could change the storyline, and of course I'll address that for you snipers. Let's talk about Ethereum. What's going on with Ethereum? It dipped a little bit below 1597 the previous weekly open, but it actually is back above it. I told you guys this is going to be an extremely volatile chart. We didn't get any full 4-hour candles below this extremely important support level, which meant that we didn't really break it, but it was just a more volatile asset, as Ethereum tends to be with a smaller market cap. But we're back above 1597, which is good. The range that Ethereum is in, 1760, major resistance. If we break above that, it could be an early confirmation that Bitcoin can potentially break above 24,000 again, or at least test it again. If we break below 1597, then it opens up the door all the way to 1277 and potentially even 1440, the 2018 previous all-time high for Ethereum. But what's more important about Ethereum is the Ethereum against Bitcoin pairing, because what we're seeing here, which could give us an early indication of not just Ethereum, but also the other altcoins and how Bitcoin wants to react to the current environment. And that's the fact that if the Ethereum to Bitcoin chart breaks this high here, similar to the S&P 500, as I mentioned yesterday, 76,000 Satoshis, that would be a very critical level that we could potentially start talking about a bullish rally for Ethereum against Bitcoin as we have the Ethereum merge on September 18th. Could be seeing a buy the hype, sell the news type of event here. And so we'll continue to monitor that and let you guys know on the channel if we're expecting Ethereum to make any sudden moves like that. But right now, Ethereum is also facing major resistance, not just against the Ethereum to Bitcoin chart so far, only forming a lower high so far. But if we look at what's happening to Ethereum to US dollar pairing, we did test 1760 already on the daily, and we found resistance there. And so Ethereum's still facing a major resistance. Even if it gets above 1760, 1980 is another roadblock there for Ethereum before we can see 2000 or anything above that. And so very interesting price action. I know PayPal is up 11% after hours, and all of the big tech companies already reported their earnings. We had the CPI report last week. We had Jerome Powell talk last week, all of these things, and we don't really have much coming up until August 10th, I believe, is the next CPI report. And then in September is when they'll do another potential interest rate increase. And so we're going to have a lot of time here. Bitcoin's certainly buying its time. But what's most important is to know the range that we're in. As long as we're inside of this range, we're not going to have a confirmation of either direction. But if we start to see any price action for the equity markets to the bullish end and Bitcoin decides to get back towards 24,000, a third run of 24,000 at this point, to me, would indicate that a third knock on the door, we can finally potentially break it to get towards 28,000 and fill that CME gap. As we all know, Ethereum, by the way, filled its CME gap fully here, and Bitcoin, being the underperformer so far, did not fill its CME gap here at 28,000. So that's our initial upside target if we can get some momentum here in the equity markets. But so far, things are stale. They've been stale for the last 60 days. You can look at this monthly candle here for the S&P 500 in the same price range for the last 60 days. So June, July, and now August, all within the same range. We have not really seen much price action. It's just a coincidence that this new month opened up in the higher end of the range. So that's why a lot of people are looking at this as a potential bull trap or relief rally, whatever that might be. And I believe that it's a good way to look at this until we can get confirmation of a reversal in trend. And that's going to come not just because of the 20-week moving average for the S&P 500, but we want to see some market structure. So I think it's nice that the S&P 500 is at the 20-week moving average, but in a bearish trend, you can come and check in with the 20-week moving average multiple times and get rejected. And so it's still on the table. Now, if we look at market structure, let's actually address what's happening here to Bitcoin, because something that I find interesting is if we look at Bitcoin against the SPY, this is the best way to look at it. We potentially have an inverse head and shoulder. I could just kind of throw this on the table that we have this sort of inverse head and shoulder pattern potentially forming here. So I'd be interested to see and monitor this. I just want to throw it out there. The reason this is valid is you can see the neckline could be considered this extremely important support, which was previous resistance. And the reason Bitcoin against SPY is so important to me right now is because this is the reason Bitcoin has failed to move above 24,000. It's just underperforming the equity markets. You can clearly see it with the monthly candle. If you look at June and July's monthly candle, just look at June's price range for Bitcoin, all the way up to a candle high of 31,982 and a candle low of 17,622. And that was June. The same month, the S&P 500, you can see candle high 41.89, candle low 36.39, and we're back up here, right? So we're back up towards the top of that June candle, but Bitcoin isn't again. So Bitcoin has had all of the reasons and all of the green lights to get to 30,000, but it's failed to do so. Is that a bearish puzzle piece? Well, the more time that goes by that we stay below 24,300, it is a bearish puzzle piece, because that means we're still finding resistance at an extremely important level. And so that's why we have to monitor 22,576 right now. That is the most important level to watch, that previous weekly open. And let's see here. Hourglass Crypto says price action is never boring. Let's see here. Round Earth says, please help. I'm so bored. This is such boring price action. Well, here's the thing. If you've read The Intelligent Investor, one of the strategies of a great trader is to enter the market when things are quiet. And so the best positions come when things are quiet. And there has been a lot of action with altcoins as of recently, and even equities right now. There's a lot of volatility around the markets. One thing I'll mention here, and this is a little bit off topic, but this is important for the four-dimensional revolving parts, is that gold closed, you can see this daily candle with a quite bearish candle symmetry here, rejecting 1764.58. Why is that important? Well, 1764.58 opened up the door for gold to get back into price discovery, but now we're back below it. Kathy Woods thinks that gold is going to continue to sell off as we see deflation affect commodities first before the real world sees the deflation. And so it's going to be interesting to see this gold chart, because I think that until gold bottoms out, we cannot assume this bear market is over. If you look at what happened in 2008, it wasn't until gold bottomed out and started to move up that everything and the worst of the recession was over. So you can see through the recession of 2008, gold, it didn't bottom out until around November of 2008. And then once it finally bottomed out and started its uptrend, it was around March where gold was almost like confirmed to break out further up. This is where equities bottomed out. So Dow Jones Industrial, the NASDAQ, the S&P 500 bottomed out once the confirmation of gold's bottom was in, and we saw a pretty significant reversal in trend and an uptrend. And so right now for gold, we want to see the bottom here come fairly soon, and so far 1700 has held as a very strong support, and so we can't say that the bottom of the equity markets and the cryptocurrency market is in until we can see something like gold give us some answers, right? It's still down, it's still bearish, could see further downside. It's not going to be until we start to see maybe a confirmation that gold's ready to move up that we're going to assume that the markets can go on their merrily way, right? So I think that gold is going to be important to monitor. I'll be quite honest, for the short-term price action, even the Euro to USD closed very bearish, which means risk-off environment probably tomorrow. So Wednesday doesn't look too good, in my opinion. It looks like we'll see some downside. It looks like the dollar wants to strengthen a bit more and test this level here at 106.56. You can clearly see with the dollar and the DXY candle symmetry and how it's about to close in 47 minutes that there's a very strong chance we see the dollar perform well tomorrow on Wednesday, and that equities could suffer because of that. And that's why I was saying this before the weekend, that Bitcoin had the green light on the weekend to break 24,000. If it didn't do it during the weekend, I'd be a little bit concerned in that, the short positions were in favor here as we were testing this major resistance. And the reason 24,300 is so important, snipers, is the fact that when Bitcoin first broke into price discovery, as you guys know, this is where Bitcoin had its pit stop before continuing further up. And so the same way that it found resistance here, but it moved to the upside, it could do the opposite here, where it finds resistance here and then it moves to the downside, a continuation of the current macro trend. And so that's my one worry here, that we're rejecting 24,300. And the real question is, I'd love to hear your thoughts in the chat for those that are live. Are you going to be buying the dip if Bitcoin comes back to 20,000? Are you going to be a buyer here, or are you going to be catching a falling knife? Here's my answer to that question. If Bitcoin does come back to 20,000, what I'm going to be monitoring, number one, is did the DXY form new highs? The DXY form new highs, you might be ready to catch a falling knife. The DXY didn't form new highs, then it might be a smart time to be getting in on that pullback into a long position, because I don't know, you think the exchanges are going to want to bring Bitcoin back down to 20,000? I'm sure a lot of leverage came in around those areas. They want to clear out some of those leveraged positions. So could it be a wick? Well, it's all dependent on how the environment looks outside of it. If the S&P 500 doesn't come and snatch this recent low, then I don't see a reason for Bitcoin to catch another leg down. But it's all dependent on how the revolving parts are when that move, if that move occurs. And so are you going to be a buyer if Bitcoin comes back to 20,000? Let's see. Round Earth says, wow, we are back to December 2020 levels. Amazing retracement. Let's see here. PA says, finally caught you live, my man. I appreciate each and every one of you tuned into the channel. I wanted to get this Tuesday update out a little bit early, not during midnight, because of what was going on with the DXY. And I think that we got some pretty good answers from the markets today. Matthew says, thoughts on Saylor leaving MicroStrategy? I think it's a great idea that Michael Saylor has left MicroStrategy as CEO, but he's still on the board, of course. But he's already done his job. I think that he's created enough publicity for MicroStrategy, and he's getting off the board to focus on the Bitcoin acquisition strategies that they have. But interestingly enough, the same way that Bitcoin against the SPY has been underperforming, you can see some of these equities that hold a lot of Bitcoin are also underperforming. You can see MicroStrategy today, it tried to break out, but it actually failed to do so. This was before the news was announced, and so it formed a lower high. If we look at Coinbase today, it was up significantly, 7.2%, but it has not formed new highs here, still a lower high. So not just Bitcoin against SPY that have been underperforming, but the equities that hold Bitcoin have been underperforming. And that's been ever since Tesla announced that they deployed 75% of their Bitcoin position and sold. And so I think that's been quite interesting there. And, you have to ask yourself a question. If, Elon Musk sold his Bitcoin at 30,000, was it just because we were going to see a small dip and then come back to 30,000, or does he see something a little bit more significant on the table? Does he see, some further bearish price action, and that's why he sold? I don't think he would have sold if Bitcoin was just going to go back up to 30,000. I don't know. I'm just trying to think like an institution, think like the richest man in the world. Quite hard to do that when you're not, but you just have to assume, okay, why did they sell 75% of their position here? Are they really crunched for cash, or do they have something in mind? Do they see something happening here? And Jacob says, thank you, Naim, for these updates. Absolutely. And let's see. Buju says, thank you a lot for the updates. PA, then the big shorts and global tensions may hit fan. Well, if things hit the fan, make sure you have your survival food, your beans, and your ammo, because those will be the best investment during a time where things hit the fan, right? And so is there anything else important for those that are watching the replay? I think that we covered most of it. I'll be monitoring Bitcoin dominance. We'll be monitoring the VIX. VIX spiked back up from this midpoint of the channel, indicating maybe some volatility in the near term. It has been on a pretty strong downtrend, which is good. We want to see the markets kind of calm down. And really, it's only a certain position that you can be in right now. If you've been buying this dip, which I certainly have been. If you've been buying this dip here at 40,000, 30,000, 19,000, 20,000, and you're just looking at the charts right now, like, what do I do? Do I sell at a profit here? Do I start buying more? Do I continue dollar cost averaging? I'm personally just not doing anything. Over the last 2 weeks, I haven't done much. I have taken long positions and short positions on margin and on leverage, but that's a separate account from my swing trading portfolio. And so for my swing trading portfolio and my long-term portfolio, I've just kind of let the market do its thing, because if it goes up, great, I've been buying the dip anyways, and that's good to see. But I'm also building a cash reserve right now. I think it's important to have a cash reserve just in case we see some downside. I don't want to deploy all of my cash position right now into the markets. I want to have my cash reserves ready if we see continued downside, and that could be 10%, 30% of your portfolio, whatever it might be. But I'm continuing to, over the last 2 weeks, just build a cash position because I've seen a lot of the equities that I've been buying the dip on, a lot of the cryptocurrencies I've been buying the dip on, move up 50%, 25%, some of them making 10% moves to the upside, 30% moves to the upside. Bitcoin Cash did really well. Ethereum Classic did really well recently. And so what I'm doing is I'm focusing on the day trading right now, because day trading for me is extremely fun, especially at these low valuations, because I love taking long positions, especially when the markets are like this in a bear market, because it's just so obvious sometimes. Like we took a long position the last time on Bitcoin right below 19,000, and that was a very good position because that stop loss at break even has maintained itself. And then we took a lot of short positions here twice when Bitcoin initially tested this resistance and the second test, and that was primarily on altcoins, which are more volatile. It's like trading TQQQ versus the QQQ, because TQQQ is a triple leverage of QQQ. And so, you know, I like taking the short positions on altcoins because I just don't feel good shorting Bitcoin. And altcoins are typically going to follow Bitcoin on those downside moves, especially in a bear market. And so, you know, you can tend to see more profits there. But for my long-term portfolio, I think right now is a good time to be building that cash position in order to prepare for some potential downside. And if we continue to see upside, that's great. I've already been buying the dip. So it depends on what position you're in. If you haven't been buying the dip, this is certainly a good time to be entering in. This consolidation we're in, I would say, is a great place to start entering in for those swing trade positions and those long-term positions, because we've yet to see Bitcoin come close to its 20-week moving average. And so we haven't really seen Bitcoin break out just yet. This is still an ongoing consolidation. And so, you know, for those that haven't been participating in this market as of recently, I would say this is certainly a good place to start. And then just, you know, continue. And for the day trades, of course, those are very fun at these low valuations, because, you know, if you're taking long positions at 23,000 versus 60,000, you have a lot more room for upside, a lot longer of amount of time to be playing those long positions before we see that, you know, that breakout. And you have all of these resistance and support levels to assist you. And so, you know, I'm really liking the map that's being played out here for Bitcoin. And I'm very confident in the levels that we have here on the Snipers channel, the #1 cryptocurrency technical analysis. And let's see, Coach Kemp says, has to be crunched for a cash, or it's a horrible move, because if not, why sell when he did? A week later was up 8% or so. Who are you talking about? Let's see here. What are you guys talking about? Think we've got a summer rally on our hands until college starts and kids throw student loans into BTC. Let's see. We have to be more resourceful and observe BTC and altcoins. Can you talk about what level you're monitoring for your next day trade? Yeah, so I'm looking to take sell stop positions and breakdown positions if Bitcoin breaks below 22,576. And I would be taking short positions in that case, expecting this door to open to see some downside. And for the long positions, I would not be taking long positions here at resistance unless we get full 4-hour candle confirmations above 24,295, and maybe we can play some of those breakout trades. But you certainly can't get a long position at a support at this area because we're so high inside of the consolidation that, you know, you're not going to be getting that good risk to reward on those long positions. And potentially if we come back to 24,295, is it smart to entertain a short position here? I would say for the third retest, it's a little bit too late. Now you're really over exhausting this consolidation. You know, for the first test, that's always the best opportunity. You're taking the most risk, but we knew this was a resistance level from the start. And so this was the best opportunity for those shorts. And then that second test, you could take that short position, but you can see it was a little bit more risky. We formed a higher high. And so, you know, that third test, it's a little bit pushing it because that could be a sign of bullish action for us to hold the previous weekly open once, come back up, form a higher high, hold the second previous weekly open for another test, a third knock, now you're really, it's going to be tough to be in that short. And so I wouldn't be taking a short position at a third retest of resistance because it could break the resistance. But if we break below this previous weekly open, there's a high chance that we could see a lot of volatility to the downside. And then at that point, I think it would be smart. I think somebody on our live stream yesterday said they were in a short at 23,000. They asked me if it was a good idea, and I said no. And obviously that came out to be true. You can see on the smaller time frames, Bitcoin's already came all the way up to 23,500. So 23,000, you're not getting a good entry there on a short, in my opinion. Nini says, "Oh, Taiwan war is going to crash Bitcoin to 12K. So fun, these moon boys." Yeah, well, when it comes to the downside potential, we breached below 22,576. And then at that point, we have to start really paying attention to the outside environment, because the question is, if Bitcoin comes back down, I'm going to leave you guys with this as homework. If Bitcoin comes back down to 20,000, what are you going to do? Are you going to be a buyer there, or are you going to be catching a falling knife? It could go either way. We could even come down, form a lower low at 17,204, or we do fall further down towards that $10,961 level, and we breach right through 13,900. All of those are on the table, but it all depends on the outside environment and how the charts look in that exact moment, because the markets are extremely dynamic. And so based on that, as long as you're tuned into the Snipers channel, you'll know what I'm doing and what we're doing here as a team. And with that, and also, is this a good time to buy alts or wait? I would be waiting, because if you haven't been buying the dip, you could be buying in. But if you've been buying the dip, as I've been, you should be up on most of your alts right now. Look at Ethereum Classic. It's already pulling back, and so I wouldn't be buying at a resistance level. That's what I want to make very clear right now. I would not be buying at a resistance level, right? Because we've all seen what's happened at a resistance level in the past, or over the last 7 months. Just because we have 1 week of bullish price action, if we've learned anything over the last 7 months, is that we've only seen relief rallies. And if the macroeconomic environment isn't getting better, as a matter of fact, if it's getting worse, people are now talking about Taiwan, then you really have to consider your odds here. And until things start to get better, even if things are just not changing, not getting worse, that's not a good thing. We want things to look better, get better. Interest rates continue to increase. CPI numbers every single month have been over the previous month. In that time frame, you want to be careful. And so I would not be buying at a resistance level for sure. That's why it's one of those moments where you just kind of have to either participate in a day trading account and take leverage positions and margin positions, and be entertained by the price action and enjoy it, or you've already been buying the dip and now you're just allowing your account to settle. You're building up your cash position on the side, or if you haven't been buying the dip, I would say on the next dip, it could be a time to start, or you can even start now, right? For the long-term portfolio, it's a whole different ballgame. Talk about the Great Reset and its impact on the markets, please, Doug. I'm not going to get into that. It's going to be a very long video. Maybe we'll do a separate live stream about the Great Reset. So, pieces, what are good exchanges for margin leverage trading? Well, I think KuCoin is getting a little bit bought up. I know a lot of people use Bybit, KuCoin. In the U.S., if you want a U.S. regulated exchange, Kraken, you can do up to 5x leverage, short and long. And there's tons of different altcoins. They have the most amount of altcoins. And so, anyways, thank you all for tuning into the channel for this Tuesday update, Snipers. I appreciate each and every one of you tuned in, and we'll continue to see what happens here with Bitcoin inside of this extremely important range with a support of 22,576 and a potential inverse head and shoulder pattern forming here. Let's continue to monitor this support level. If we break below it, it opens up the door to 20,000 US dollars. But if we hold above it and we can get another third test of 24,000, the major resistance, then a confirmation 4-hour candles above 24,300 opens up the door for Bitcoin to potentially fulfill this ascending triangle to go up and test 28,000, fill that CME gap, potentially even towards 30,000, and reclaim this consolidation, which the S&P 500 and the NASDAQ has already done. But they have taken a pit stop so far, forming a lower high. We don't know what the outcome is going to be, but if you're tuned into the channel, I'll keep you guys updated. And until next time, thank you all for tuning into the live chat. I appreciate all of you guys. I'll see you on the Discord. Snipers.